Everybody, it is Thursday, Cinco de Mayo. And yesterday, the 4th was with everybody. I began yesterday looking at this as trying to give everybody as much caution as possible, having already given the delivery on the weekend that I did, saying the bottom is in. An explosive three-wave move to the upside is the minimum that we're going to be looking at. And yesterday, when we got in there prior to the open, I said my preference. FOMC days tend to trend one way starting around 10:30 in the morning into the meeting and then reverse. That's what they tend to do. With the clear resistance above on SPX and SPY, which was our 4,200 level and that trend line, VIX was over there at 2884. I would prefer to see it grind lower today into the meeting and then a less hawkish Powell to catalyst through that resistance and to that SPX 4255, SPY 426. This was prior to the open. And then I came out there 1 minute before the open saying SPY 414 is the ideal support visit for my preference. I came out there 9:44 just after the open saying 414, 4150, patient call shoppers ahead of the Fed. We got exactly that, as you know. And when I say we got exactly that, I'll go here on the 1 minute. Here we are opening up, bam, 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 and it was right there at 11:30 in the morning. We came down to 4148.91. 1 point off of where my low side target was. Now you came down to it again during that shake and bake between when Powell gave out the meeting results, which took us to that 41.97 resistance, and then down there until he started talking. And as soon as he went out with what I had said was when 0.75 gets mentioned, I'm looking for a less hawkish tone. He gave that. We exploded right to that 42.55 level that I'm looking at. We held there until around 3 o'clock, and then they said, you know what, man? Fuck this shit. Let's go fucking do it. Bam! Right up through the 100 extension of the chart that I'm going to show you over here that I had already mentioned in the chat room earlier yesterday in the afternoon. If we break above that 4,200, we should be looking at this 42.8650 going into Friday. They decided, you know what, man, let's just go fucking do it. And they did it right there. Right on up there to that 43.07, a 6% move off of that low that we posted there on Monday, which was fractionally below for 7 minutes, that 40.80.93 level that I had given you for where we're looking for that major 5 bottom. Lowering out here a little bit wider. This is that final leg off the March high of that correction wave so that you can try and do this on your own. No one taught anybody how to chart until somebody started charting. And then the other people that saw people charting, they started following and trying to do it on their own. And eventually, people just, like mechanics, started to know how to fix cars. You had your boom, boom, 1, 2. Here was your big 3. It passed the 100 extension, got up there to your 4, 43.09. And then, bam, as we lost that last week with the 4 consecutive down weeks. 40.81, bam, tagged it, boom, 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 1, 2, 3 waves up, 6%. This is a big problem. This is a major problem. This is an incredible problem that they took you from 43.08 right there, that 43.09 right there, and that's where we ended off yesterday. And now what we're seeing already here is we're a little bit hungover. You know, you see everything just going, hey, hang on, yeah, everything's cool here. And now the EU's just getting open going, man, you guys drink way too much. And now we're getting a little bit of a dip here. We should see a dip back to around that 4,200 level that we had. No lower than that, and I would even expect it to be around that 40.21, 45 on SPY, around that 422 or 4222 level over there on the SPX. That should not break, just to cool the charts off and then we get the jobs report tomorrow, and then considering where we are, we should be looking higher than that 4,300. We should be looking somewhere into the range of this 445 level, 435, 445, up into that level range, back up above 10% correction level. That is the primary objective, is to get SPY back up above 432 and everything cools down. And one of the things I can show you here really quick, if I can get onto it, and bam, 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 and here we are. This is my spreadsheet, again, for what's going on every day. You had your range, your gap down, open, close, low of the day, how far we are from the all-time close. We closed yesterday down 10% exactly year to date. Exactly. We closed down 10.76% from the all-time high. And you see these consecutive yellows here. How many consecutive days in a row we've closed below that 10% level? Well, I bring you up here over into February, when we had that dip over there in February, the little bit of a bounce, then the dip, and then we had that massive rally in March. Here is the consecutive days below 10%. I'm looking for us to be back up above 10%. Maybe not by the end of the week, but definitely as we start to head into the beginning and into the end of next week. And I'll take you back onto the chart again to show you where I'm looking at as well. This is the indicator that says, you know what, you guys have drank way too much. It is time for you to go to bed. 36.20 we nailed. I mailed out that email there on Monday when we hit it. Bam, we've dropped down here below 28.84. Very impressive what we needed to do. Trend line here right around 24.30 is going to stall us a little bit. And I am looking for that 21.02 no later than the end of next week, most likely in the beginning, early portion of next week. And then from there, we can start to look at something where I would say take off the July calls, scale down on them if you need to, and start looking for something that is a little bit more of an aggressive dip, not to break down, but to just play a dip. See you guys in the chat room.